Welcome to Options 101, Terminology and Basic Concepts, brought to you by TradeRightly.com. This is part 4, and we are going to talk more about options expiration. So we've said a couple of times already in the first 3 parts of this video series that options expire, and there are 2 option terms that we're going to be dealing with in our strategy. And so I wanted to talk about what those 2 terms are and some of their characteristics. So the first term that we are going to be talking about is monthly. And monthly options they're the most commonly traded. There are always going to be options available at least for the current month and the next month. So when you log on to your broker software and you take a look at how the options are listed, there will always be options available for the month that you're in and the next month. There may very well be, and there will be, other time frames available too, but the monthlies are one of the ones that we're concerned with, so I just want to talk about how those are structured. Monthlies expire, practically speaking, that expiration always occurs at the closing bell on the 3rd Friday of the month. And the reason I put practically speaking in parentheses is that technically the option contract expires on the Saturday after this 3rd Friday, but there is no trading on Saturdays. So when we are looking to, you'll see as we go on and we talk more about the strategy, we want our options to expire. We're waiting for that expiration, and if we haven't been assigned at the closing bell at the end of trading on that Friday in the 3rd week, then we're safe. It doesn't matter that the expiration technically occurs on the Saturday. So that's the first, monthly options. There's always monthlies available for the current month and the next month. And then the other option term that we're going to be dealing with are weekly options. Now, for many underlyings, weekly options are issued for all other weeks of the month that the monthly options aren't available. So I know this is kind of weird and it's not intuitive, but one of the ways to understand it is that there used to only be monthly options. There were no weekly options. It's a relatively new, what was it, 2010? It was 2009 or 2010 maybe that weeklies came into existence. So before that, you only had a monthly option. So if you wanted to buy an option, it was, for the current month, or you could buy an option for the next month out, and depending on what underlying you're looking at, there might be options for future months out beyond the 2-month period. But then the need arose, or the desire arose among traders to be able to trade options with shorter lifespans. And as you can see here, a weekly option only has a 9-day lifespan. So what happens is these weeklies come into existence the Thursday before expiration. So every Thursday, a new weekly option is created, and that option expires the following Friday. So you'd have, Thursday, Friday, and then there's no trading over the weekend, but Saturday, Sunday, and then market opens on Monday, Tuesday, Wednesday, Thursday, and then it expires that following Friday for a total of a 9-day lifespan. So the only thing that's important for you to understand is we're trading every week. And so in the first week of the month, we're trading a weekly. In the second week of the month, we're trading another weekly. In the third week of the month, there is no weekly because that's when the monthly option expires. So they don't issue weekly options for that third week of the month because that's when the monthly options expire and always have expired. So the weeklies were really just created to fill in the other weeks of the month that didn't already have options expiring in them. And you'll get to see when I open up the brokerage software and show you, okay, this is this week, and we're going to go ahead and pick out some options and run through the strategy. You'll see how this comes into play. But those are the two option types that I wanted you to understand. There are others. There are longer ones. There's what's called leaps, which are really long-term options, options that don't expire for more than a year from now. Those just aren't relevant for our strategy. We're much more interested in options that expire very soon because the market has a way of doing all kinds of crazy things, and the longer we have to be fortune tellers, the worse off we are. So we'd rather be able to look at our market analysis and make a trade for a very short period of time where we can be fairly confident that big swings are not going to damage our trading profitability. So that is it for this episode of Options 101. For more information on how you can beat the pants off the market, visit TradeRightly.com.